Hey, it's me. After another call today on, hey, Chris, how do I invest in AI? I thought I'd make a video on it since it's all the rage right now, right? How do I invest in AI? And people see it as a viable investment space or for companies going forward. To clear things with you, I just have my mic here a little bit closer today. Keep that a little bit. You got to keep it close, but out of the shot the best I can, just for sound quality. And you can read in the description below the bullet points, but let me give you a disclaimer before I run the normal disclaimers, and that is, at no point in this video am I going to speak about a specific AI investment, right? So I can't mention any specific mutual funds or indices. I try to avoid that, along with specific publicly traded companies to invest in or that you can invest in. And the reason for that is sometimes if you say things a certain way and it's construed as a recommendation, it triggers what's called a FINRA filing. And then I have to file this video with FINRA prior to posting it. And that time frame can be 4 to 6 weeks, maybe 8 weeks. And then there's a filing fee. I'll estimate $500. And so for those reasons, try to avoid the delay in posting these and try to avoid video costs adding up. So just if you're looking for specific names and the next AI stock that's going to make you a gazillionaire, you're not going to find it here, but you're going to find a well thought out video on how you can do some research and know what the pros and cons are if you decide to invest in this space. So let's run the real disclaimers now, and I'll be right back. If you want to jump ahead, you can see below in the descriptions what I'm going to talk about, but let me share that on my screen right now. I'll kind of just go through it. I'll hang out here until I have to put something that I might cover. So let's just hang out. Let's just hang out down here, kind of out of the way. And so you can see it's, look at that, March 27th at 3:54. All right, so that's, this is generally the time frame for which this video applies. So we'll talk about how to invest in AI. Well, the easiest way is through mutual funds or index funds that own companies or that buy AI companies. So you get a technology mutual fund or a tech index fund. And again, these funds will own publicly traded companies for the most part that either are in AI or invest in companies in AI. And so as I say that, recently there have been some large tech companies that have bought or invested in startup AI companies. So if you Google who invested in ChatGPT or who bought Wiz, you'll find these large tech companies that are buying these smaller startups. Well, ChatGPT is no longer small, but at one point they were. And if you think about this, let me switch back here for a sec. The reason why it's so hard to be an early investor in these tech companies, just think about the classic case of sort of the quintessential technology story. Two guys in a garage developing something, working on something, building something. I mean, one, you and I, most normal people, have never heard of these guys until we've heard of these guys. And by then, the deal's done. Even if you approach them, if these were your neighbors and you went over and say, hey, here's $1 million for your business, they'd probably say, well, we're looking more for $1 billion or $5 billion or $10 billion from a big tech company or a larger company in our space. So unless you're on, the deal team for some large tech company, there's a chance that if you're watching this video, if there's 1,000 people who've actually done these things, or I don't even know, I can't even quantify. I'm just trying to throw numbers out there to make a point. Chances are you're not going to get it on the ground floor. So I just want to set expectations that I've never been on the ground floor. I don't think I'll ever be on the ground floor. And it is very difficult to be on the ground floor. All right. So, but if you invest in a tech fund or a technology company who has the capabilities of being on the ground floor, that's a more reasonable way to invest in the AI space. So let's go back to the bullet points here. So then once an AI company goes public, I mean, we're all going to know about it, right? And then you have to make a decision. Do I buy this company now that's publicly traded? buying the day it goes public is not buying. It's not really called buying it's buying at the IPO, but you're really not involved in the IPO. Okay, never mind those semantics. I shouldn't get into that. But once the company starts trading on a stock exchange, you can decide if you want to make an investment or not. You can now. There are becoming more ways to invest prior to these companies going public on the stock exchange. So investing in companies prior to they go on the stock exchange, can potentially produce better results than waiting for them to go public, right? Because that's getting in closer to the ground floor. And so what you would want to do is Google, how do I invest in private tech companies? And you'll come across websites now they're in the business of having companies. I guess the model is they're not finding these companies per se by knocking on garage doors, but companies list on these websites to be traded, but they're privately held. They're not publicly held. There's a difference, and let's share that. So what I can do is, because these are privately held companies, there's privately held companies out there who I can't help you buy. I simply can't help you buy. I don't know. I can certainly talk about that, and we'll get into some things that you need to be aware of when we do that. So let's switch to this. And through Yahoo Finance, they now have a new link called Private Companies. And this is listing private companies has enough financial data known, I guess, to be on this site. So what I did was I picked out some companies that I'm certain you've heard of, and then a company that maybe you have or haven't in the AI space, and then in a non-AI space, just to share what you might see or what you can see when you get into this space where all the financial information is not necessarily known. There's no daily stock price. And so it's very hard. It's just a different way to get valuations. They're subject to private valuations and audits versus publicly traded markets who have a value every single minute of every single day because it's based upon collective global sentiment of the company. So let's do this. Let's start with the first one. I'll switch just over. I'm certain you've all heard of SpaceX. So let's see what Yahoo Finance says about SpaceX. It kind of goes into a description of the company, key executives, and some facts and a little bit of a half-decent commentary. But then what I did is I found a website who gives a little bit better kind of financial metrics on this. And so let me share. Going back to the bullet points here, things to be aware of in this space, there's something called price to earnings and price to revenue. And let me describe what that is. Price to earnings is the stock price divided by earnings per share, which is net income divided by the amount of shares outstanding. And so this is a way of thinking of, if a company makes $1 billion a year in revenue, but they lose money, they have no price earnings. They have no earnings, right? They've lost money. So that's like an impossible calculation. That's just an A on the screen. If a company does $1 billion and it nets, I don't know, I'll just say something silly. It nets $1 billion, what's a good number? 100 billion, and it nets $10 million. So let's do a billion divided by 10 million, right? That's a price earnings of 100. Now, the S&P, a price earnings that's reasonable is something like 18 to 20. So you understand you have to calculate a price earnings to see what premium might be on that particular privately held company, that valuation. And then there's also a thing called price to revenue. Price to revenue is a little bit easier to calculate and also to kind of understand. Price to revenue is, take that company again who's doing $1 billion and netting 10 million. Well, they're going to have a stock price that's based upon their revenue. And if the stock price is such that the price to revenue is is 50, what that means is you're paying 50 times for annual gross sales. That's like, investing $100 and getting back, getting back $2 a year. That's, if you gave someone $100 and they said, okay, I'll pay back $2 a year, it's going to take you 50 years to get your money back, if at all. So, do you really want to wait 50 years to get your money back? And that's not even the thing. That's price to revenue, not price to earnings. So, price to revenue is also just a metric to be wary of. And for instance, for the NASDAQ index, which I think is kind of a fair index to put these tech companies up against, the price to revenue of the entire NASDAQ index is a combined number of $6.03 a share. So what that means is, for every $100 you invest, you're going to get back $6. The revenue of the company is $6 for every $100 of market value. So it's like an 18-year break even. They have price earnings here. Price earnings of the NASDAQ, the PE ratio of the NASDAQ is 40. PE ratio of the S&P is something like 20. Just go with me here. It's in the 20s, right? I'm not exact, but it's in the 20s. So the price earnings of the publicly traded NASDAQ companies are 40, and the price to revenue is 6. And the reason I say that is if you look at something like SpaceX, and then I found this website, Sacra.com, and this kind of gets into a little bit of that price earnings and price to revenue for these companies. Let's just look at this. For example, SpaceX, Sacra estimates SpaceX hit $14.2 billion in revenue for 2024. It's an estimate. I'm just going to go with it here. I'll take this website face value, and the company has achieved profitability with $55 million in profit in $1.5 billion. They reached $55 million in profit on $1.5 billion in revenue in 2023, and then they hit $14 billion of revenue in 2024. I mean, considerable growth, right? So it's quarterly profit, quarterly revenue. But let me get to the point here I'm trying to make, is that if you look at the valuation, they received a valuation of $350 billion December of 2024. And so SpaceX is valued at 24.6 its projected revenue. So that's a PE of 24. Not bad for SpaceX, not bad for a startup. I'd say it's actually like appealing. Here's something else, OpenAI, right? They're the ones for ChatGPT. Let's look at this one. If we look at OpenAI, if we look at their estimates, Sacra estimates that OpenAI hit $4 billion in annual reoccurring revenue. Okay, so that's total, but that's reoccurring. Maybe they only do reoccurring. It's in September of 2024, and it's valued at $157 billion, right? So that valuation gives them a 40 on revenue, a 40 on their revenue multiple. So that's actually in line with NASDAQ. Now, I don't know if it gives earnings per share, 157, based on their annual reoccurring revenue of $4 billion. They traded at a 40 multiple. Does this say, and pardon me, oh, you know what? They have $5 billion in losses, right? So $4 billion of revenue, but they lose $5 billion a year. That's because their investors have given them money, said, go build this thing, make it the best ever. So if they make $4 billion and they lose $5 billion, it's costing them $9 billion a year to run their operation. So do you want to invest in a company who is losing money? They may become profitable. These guys might be the next biggest thing. I don't know, but they currently are not profitable. So there's no way for them to return money to shareholders other than through growth of their stock, which other companies have done. It's just a risky approach. Let's look at something else. Anthropic, right? This is kind of another one of those kind of ChatGPT things, I believe. And so let's look at Anthropic. Anthropic has a valuation $61.5 billion company with $1.4 billion in annual reoccurring revenue. So they make $1.4 billion. Someone's valuing them at 61.5, so it's a 43.9 price to revenue, and it doesn't say if they're profitable or not here real quickly. So that's something definitely to be aware of, is price to earnings and price to sales. Let me just look here. I just wanted to see if I could quickly find a PE. I can't. A last one, this is kind of intriguing, not an AI company, but just as a comparison, because they're profitable, and I was going to pull these numbers. Fanatics, which does like sports memorabilia and sports merchandise, Fanatics was valued at $31 billion, December of 2022. And this will go on to talk about, I have some future bullet points. This valuation from December of 2022, it's over 23, it's 2 years beyond that. What are they worth now? I don't know. Do you want to know what your investment's worth every 2 years or every 2 seconds? So Fanatics has revenue of $8 billion, and so their price to revenue is only 3.1. I mean, that's a conservative ratio compared to the 40s we've been seeing. Also, I do think I had seen in here that Fanatics had positive net income. And excuse me a moment while I find that. All right, so I couldn't find that for Fanatics, but here is Stripe, maybe for them, or a payment processing system, right? So this was easy enough to find out. Stripe's gross revenue was $14 billion in 2022. They have a $50 billion valuation. So that's their gross revenue is $14 billion. So their price, $50 billion divided by $14 billion. They have a price to revenue of 3.6. All right, so that's lower than the NASDAQ index in whole, so that's not a bad valuation. I mean, it's like not unreasonable, right? It's not terribly lofty if these numbers are right. And then their net income is $2.45 billion. So $50 billion divided by $2.45 billion, 20. So their PE is 20.4, actually 20.4. So that's not atrocious. But the last valuation in 2022, which brings up some other bullet points. All right, so let me get up my screen again. All right, so warnings, infrequent valuations. Again, you normally want to know how much your investment's worth as often as possible. I guess, that's what we're used to with mutual funds and publicly traded stocks, but I'm not saying don't do this. I'm just saying just know they only value your company every now and then. And private valuations can differ significantly from public valuations. And perhaps a company, if they're valued at $50 billion today, maybe the next valuation comes in at $40 billion. And you had no way, limited or possibly no liquidity. You just had absolutely no way to sell your shares. I mean, these privately held companies, perhaps there's no one selling for you to buy, and there's no one buying for you to sell to. So it's liquidity. In the stock market, many companies have millions and billions of transactions a day. It's no problem to buy, and it's no problem to sell. There's some limited, that's out there where you can't buy and sell because there's no market for it on a given day, and they're illiquid and not frequently traded. But if you can think of a publicly traded company, it's trading millions of shares a day. You can buy it and sell it every single day, pretty much no problem, right? If the market's operating normally. But with privately held investments, there is a chance that when you need your money, you're not going to be able to get it. So that's why there's hoops to go through to make these investments, because they try and screen for folks who can afford to not have liquidity. There's a couple different metrics and technical things like Reg D that I wasn't intending to get into on this discussion, and I won't. But if you want to look up criteria for accredited investor, or how do I qualify for a Reg D placement, those are the technical things. You can look that up. But when you make these investments, there's limited liquidity, possibly no liquidity. The time went from $50 billion in value to $100 billion. You couldn't have sold along the way. If it goes from 50 billion to 9 billion, you can't sell on the way down. It's just a chance that you cannot. Um, so these are things that you need to be aware of when, if you decide to try and, chase an AI investment. I think uh, the most straightforward thing for, I'll call it normal people, is going to be through mutual funds and index funds that own companies that invest in AI or buy other companies that invest in AI. There are other ways to go about it. I think that you just need to be aware of what you're getting into so that you can get out of it. I think there could be great opportunities in AI. I think there's going to be some companies that do very well, and I think there's some companies that do bankrupt. So I guess that would suggest why a diversified portfolio is, even within a sector, is a better approach than trying to pick one or two. Um, but I hope that you find this helpful. I hope if you're looking for AI companies, this helps you understand how you can possibly invest in AI and maybe some things to be weary of and some ways to look up some information. So thanks for watching, and we'll see you back here as soon as possible.